Hi and welcome to Knowledge Centre TV. So we've got a great question here that Gillian has submitted, and it has to do with selling an investment property and putting the profits into her self-managed superannuation fund. This is a common question, so let's take a look at the result of doing this. Firstly, it's important to ask, well, why would somebody want to actually put their profits into a self-managed super fund? And one of the main reasons is that people, once they get into pension phase, are able to take money out of superannuation tax-free. So a lot of the time people think it's this tax-free benefit that would be worthwhile for them transferring profits that they have made in their investment properties into a self-managed super fund. So while this sounds good, let's look at the cost of selling as the main thing that most people miss when they're actually selling their. So if we assume here we've got an investment property and it's valued at $400,000, it was purchased for $200,000, that means we've got a profit of $200,000. Now when paying capital gains tax, you only pay capital gains tax on 50% of the profits if you've held the asset for more than 12 months. So in this case it's going to be 50% of $200,000, brings it down to $100,000. Capital gains tax is worked out based on your income tax rate. So this would be $100,000 times your tax rate equals the actual capital gains tax you would pay. Okay, so let's have a look at the costs of selling. So $100,000 times, so the highest tax rate of 46.5% equals $46,500 in capital gains tax. Plus you would actually have to pay agents fees and legal fees when selling a property. And these equate to, or can add up to, about 2%. But if we look at this example now, what we've basically spent is, say, $50,000 round figures on tax. So the end result is we've got our home, the purchase price and the profit of $200,000, less the $50,000 in capital gains tax equals about $150,000 to put in super. So in this scenario here, Gillian would only be able to put $150,000 into her super fund. She would then, with that $150,000, go out and purchase property with it. Also, when she does that, she needs to take into account the additional cost of stamp duty on the new property. So, in short, what an investor must look at is the cost of selling. And we cover this in our book, How to Achieve Wealth for Life, on page 49, where we actually work out it can be as much as 20% of the property that you're selling will be the end costs by the time you've bought another property. So now let's look at a solution for Gillian. So instead of actually transferring that, or selling a property and transferring the money into super, what's possible to do is to refinance her current property. So we've assumed the value is $400,000. Let's say she has $80,000 in debt, and therefore she's got a total equity of $320,000. What Gillian is able to do is refinance up to 80% of the value of her property. This means she can get a total loan for $320,000. Less the loan she's already got means she's got a total equity of $240,000 available. So what she can do with that money, she can put $240,000 into her superannuation, and she can buy another investment property with that via a super. And I will add this point that now with superannuation rules have changed for self-managed super funds, and it is possible to borrow. So on that new investment property down there, we could actually use that as security, and there is a special way that you can do that. Alternatively, Gillian can refinance and simply buy property directly. She doesn't necessarily have to use a super fund if she doesn't want to. So in doing this, Gillian doesn't incur the costs we've mentioned. Of course there will be interest on borrowings which will need to be taken out, but the bottom line is her assets have not been reduced and she's able to continue to increase the size of her assets and grow her wealth. I hope this information has been helpful. For personal advice you will need to speak to your own accountant or financial advisor. If you haven't already, you can join the accountants lists under the Resource Centre, and we'll send you the details of where you can get more help. Thanks for watching. Until next time, remember, never stop learning.